Hello traders, Gary Wagner here. Just about 2:30 in Honolulu, 7:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 18th day of December, 2020, and this is the daily report for gold and silver, our weekend review. And what a week we have witnessed. Major rallies in both gold and silver, taking them moderately higher for the week. Tremendous pressure on the U.S. dollar, and the equities markets hit all-time highs this week. This is due to a series of three events that we talk about in our opening letter. But first, we'll take a look at charts, that following the price board, which we will go to now. This was a truly amazing week with dramatic gains seen in gold, silver, and the U.S. equities markets. Gold did close slightly lower on the day, giving back about $3.60 of the weekly gain, but it closed at $1,886.80, and certainly was a very strong week considering that it opened below $1,850 on Monday and closed almost $20 higher overall on the week. Spot pricing also had dramatic gains, $18.8140. And when we look at silver, it did sell off by 18 cents today and is currently printing at $26 per ounce. This bases the most active March contract. There are two ETFs that we are currently involved in a trade. We went long the iShares Silver middle of the week and entered at $23.23 per share. It's currently tracking at $23.96 per share. And then GLD was a market that we entered at $174.12. That is at $176.44. So we've got it a couple dollars above our entry price. We did in fact send out a trade alert earlier today recommending that you raise stops across the board. We'll go through the particular numbers when we pull up our charts. But one of the most noteworthy vehicles to really take some dramatic hits in the market was the dollar index. And the dollar index had been trading lower for the better part of a week. Although it gained fractionally, it is now below 90 at 89.81. And then the indices come into play too, because renewed optimism, once the vaccine by Pfizer rolled out, allowed all three indexes to close at their highest point on record for the week. In light of the fact that all three indexes did close lower on the day, the Dow Jones Industrial Average lost 124 points, but closed above 30,000 at 30,179. The Standard & Poor's also had a drawdown today of about 0.3% at 3709.41. And lastly, the NASDAQ Composite had a fractional decline of 0.07% and is now fixed at $12,755 and change. Let's take a look at our technical studies. Traders, if you recall from earlier this week and last week, I had four basic resistance areas that I believe gold had to really make it through. And as you can see, the lines that I've just put in green represent the ones that have now become potential levels of support and are no longer resistance areas. The first one, of course, was what I consider to be the most critical one, which came in at 1847, and that was based upon a Fibonacci retracement, the 38.2% retracement, and that's, of course, of a long data set beginning in March when gold was at 1450 up until the new record high at 2088. This being Friday, Thursday, Wednesday, and Tuesday, this is Monday's candle here. And that was really the last trading day this week when gold pricing was below this key and I believe really strong resistance level. But it was taken out very, very strongly on a closing basis, followed by the action on Wednesday in which the low of the day hit this particular point and actually solidified that this is now a major level of support. Then yesterday, for the first time since the beginning of November, and that's these candles here, and it was a short period of time, for 3 days when we saw gold prices trade above the 50-day moving average. And that was one of the first occurrences since we saw this fall back in September of this year. Now, what are we looking at? We absolutely have resistance at 1900. There's no doubt about that. That's a key psychological level. I don't have it marked in because in terms of the data points themselves, there isn't any very strong technical evidence that we can pinpoint tops or bottoms at this price point, because for the most part, you can see that when it was trading sideways through this area, it was all over the board. There's really no real area except a couple of lows where we can say that 1900 acted as a support or a resistance area. So we've effectively tested it, and today we did not see the market close above it, and yesterday it simply touched upon it in terms of an intraday high. And that's why I believe the next very important level comes in now at 1912. The 100-day moving average is the next real level that we want to see gold be able to test. We did see a slight decline today. That is a normal profit-taking area based upon the sizable move that we witnessed in gold prices this week. And because of that, I'm not looking at this as any clear indication that we will see a retracement next week, but the optimism that they're going to be able to pass a stimulus bill that will be enacted this year is not as high of a probability. In other words, I am not as confident that they'll be able to pull it off with a positive vote next week and the implementation to aid those that are going to run out of employment benefits, the extended benefits, as well as the moratorium on evictions that, of course, concludes on the 31st of December. That was the primary reason that we acted to move stops up quicker than I had hoped to, but I felt that it was needed that we protect our equity, and the stops have been placed that for the most part, if hit, will take us out with small profits, and most importantly, guarantee that we will not take a loss on this current trade. So traders, my recommendation is that you maintain your long February gold position and raise your stops to 1869. Traders, we entered a long position in March silver futures. Entry price on that came in at around 25.16 to 25.25. We recommended today that all traders move their stops to 25.30, thereby locking in some small profits if we should see any downside pressure next week. What is interesting to me is the fact that silver prices open below and close effectively above the 23% Fibonacci retracement level, and then today's action, we have the low coming in just above that. So it is now looking as though this will be a level of support at 25.75. One last announcement that I do want to make, and that is we will be holding a live webinar that will be broadcast on YouTube on Tuesday at 4 o'clock Eastern Standard Time. We will send out a special link on Monday so that all that wish to participate and watch this webinar are able to do so. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.